Hello, good day. The last 2 to 3 days, the NASDAQ have been moving very, very strongly. And let me try to share with you, as a trader, on how to unravel the mystery behind and what are the forces at play. So let's go. So if you look at the last 4 to 5 days, you start to see a gap out in the NASDAQ pricing. This shows that the bull are in control. However, do check out for the market if it's moving into an overbought and whether the adjustment will come in matter of time. Typically, in such a trend, when exhaustion come in, you will see that the price action of the NASDAQ will fall below the previous gap. In fact, if we look into the 10-year Treasury year, on October 24, you already see that the gap ping down process actually started. So therefore, the market have already so-called projected that Jerome Powell potentially and higher probability will not announce an interest rate hike on 1st of November. And you can see that Jerome Powell on 1st November, after closing 2 days of meeting, he decided to hold the rate steady. There's no hike. So with no hike, of course, NASDAQ is further prosper upwards. So let's look into the yield curve. The current yield curve, as you can see, is inverted. So what does inverted mean? It means that the near the range 1 month to 1 year is a higher yield return than those that are in the 10-year, 20 and 30 years. So usually in a normal market, to have a higher yield for a longer period, as you can see in November 2021. The same can be also seen in April 2021 over here. The short term, the 1 month to 1 year, is lower interest, and the longer year, they are actually at a higher interest. If we look into the history, a flat and inverted yield rate can only be seen in the past in 2000 and a flat one in 2007. So today we are in an inverted yield curve, and typically in the market, what I mentioned on, when there's an inverted yield curve, sooner or later, in a matter of time, there will be a recession. So another video will be talking about when an inverted yield curve came and also when the recession come. So before I end this video, let's look into the price action of NASDAQ. So guys, this is the NASDAQ curve. You can see that on the last few weeks, the NASDAQ curve is moving very, very near to the 200 MA moving average. So if you look at the past, this is one time when he passed through the 200 and it moved out. But most of the time when they cut through, the NASDAQ pricing cut through the 200 MA, it go for further downwards. So that's why in the previous 2 to 3 weeks, there are many calls in the market talking about, how dangerous the market is. So in fact, a lot of the trader and long-term are looking at whether this NASDAQ can hold at the 200 MA. It is not easy because at the point of time, there's also uncertainty in Middle East, high inflation, Jerome Powell may actually increase the rate, high oil price, and also potentially of the scale up in escalation in Middle East. Potentially there's uncertainty also on the South China Sea. So you can see one breakdown on the 200 MA, drop, a lot of drop. And previously, the other breakdown of the 200 MA in 2020 dropped as well. The other one, 2018, the breakdown of 200 MA, also in October time frame, further drops. Similarly, in the breakdown of 200 MA on 2016, further drop. But you can see in October 2014, when the price action touched the 200 MA, it was further pulled out. And this is very similar to what we are seeing now. So therefore, we have to look back on what is happening then and what is the price action to make a comparison to what we are seeing in today's situation. So you can see that actually the price action now did not touch the 200 MA. It was pulled out very quickly, and that is because in the November itself, 1st November, Jerome Powell have hold the rate, the interest rate. Secondly, if you look into Treasury yield, the 10 years itself have actually started to drop off from 24th of October. So when the news hit the market on both Treasury yield and also Jerome Powell did not increase the interest rate hike, it became a momentum to push up the price. And of course, the Middle East situation where Israel have moved into Gaza, we have not seen a widening in the scale of the war. So because of all this action that are staying in place, that's why you can see a very high push up of the pricing. Now what we need to see is the matter of exhaustion. So what it means is, when will the price be exhausted and how much it will retrace back, and that will determine whether the market is still bullish or not. Do press the like button and hit the subscribe button so that you will get the latest notification of my video. Also let me know what you think, and meantime take care. Thank you.